It's the time of year where the bulls traditionally have a distinct advantage, and this seasonal strength is playing out once again, with global equity markets firing up as we extract just that little bit more performance out of the markets into year-end. One tax boost continues. A positive outcome in the US tax bill was the buzz on Friday and also through the weekend, and this spilled over into Asia yesterday and should be prevalent today. There are still many cynical views as to the ethics involved in getting the Republican Senate fully on board and the provision placed into the tax bill, which benefits owners of complex real estate investments, which has subsequently been the trigger for Senator Bob Corker to disregard his well-publicized concerns around a blowout in fiscal deficit and is now fully on board with tax reform. This concern on the deficit blowout may no longer be one Senator Corker is too worried about, but ratings agency Moody's has weighed into the debate, detailing that tax reform is a long-term negative for the US economy. We should still see a vote in tonight's session in the House, followed by a more meaningful vote through the Senate, with Trump signing this into law later this week. To Wall Street, the question of how much of the tax reform story is now in the price is one many share. One suspects a great deal, with the S&P 500, Dow Jones and Nasdaq 100 all pushing to new all-time highs, with Apple showing its position as market leader and trading into $177.16, again, a new all-time high. Volumes have been in line with the 30-day average, while breadth has been solid, with 75% of S&P 500 companies pushing higher. The Russell 2000 has put on another 1.1% and should be supported on any pullbacks here. Interestingly though, we have seen limited moves in high yield or investment grade credit, and spreads are largely unchanged despite equities pushing ever higher. 3. Europe. We can also see the good flows into European markets too, and there seems little anxiety around this Thursday's Catalan election, while local media has focused on the Italian elections, expected in March, where it seems the Five-Star Movement may actually be looking to form a coalition, which suggests a slightly less extreme stance from this populist movement. The German DAX has been on the watch list for a break of the 13,200 to 12,900 trading range it been confined to since the 10th of November, and having rallied 1.6% overnight, we have seen the bulls win this battle fairly emphatically. 13,500 and higher seems like an elevated probability on this development. For Fed talk, in central bank chatter, we have seen some fairly pessimistic comments from Fed member Neil Kashkari, but did we expect anything else given he voted to keep rates on hold in December? His view that a flatter yield curve signaled a higher recession risk and that bond market telling us the odds of recession are rising is a feature of daily commentary from the bears of late, and to be fair, even Janet Yellen has previously made mention that the Fed would take into account the Treasury curve in assessing policy. Mr. Kashkari did mention that he does see urgent financial stability risks at the moment, and perhaps this is the point of contention within the Fed's ranks, as there are others who would certainly see asset price inflation as an issue which could manifest into something more tangible in 2018, with a belief in the feedback loop between higher asset prices and broad economics, and thus raising rates is still the prudent step.